Welcome back to Wealthy Business, the channel where we explore the powerful intersection of finance, innovation, and global markets, helping you understand how today's headlines shape tomorrow's wealth. Today we're diving into a massive shift in the electric vehicle landscape, a story that's shaking up Europe's automotive market and redefining the global EV race. Chinese carmaker BYD has just reported staggering growth in the United Kingdom, up 80% year-on-year, with over 11,000 vehicles sold in just 1 month. Let's break down how this once little-known company has become Tesla's most serious rival, why the UK is key to its global strategy, and what this means for investors and the future of electric mobility. One from phones to cars, the BYD evolution. To understand BYD's rise, we need to rewind a bit. Founded in 1995, BYD, short for Build Your Dreams, started as a mobile phone battery manufacturer. Within a decade, it became one of China's largest battery producers. Then, leveraging its battery expertise, the company pivoted toward automotive innovation, launching its first electric vehicle in 2008. Fast forward to 2025, and BYD is not just another automaker, it's a global EV powerhouse, outpacing competitors in multiple markets and challenging Tesla's dominance in key regions. In September, BYD sold 11,271 cars in the UK, an astonishing 880% increase from the same period last year. That brings its total for 2025 to just over 35,000 vehicles, making Britain BYD's largest market outside China, with a 2.2% market share year-to-date. This is a milestone achievement, not just for BYD, but for the entire EV industry. It signals that European consumers are embracing affordable Chinese EVs, despite political tensions and tariffs. 3. Price advantage, the Tesla comparison. So, what's driving this surge? Price, strategy, and accessibility. Take the BYD Dolphin, one of the company's best-selling models. It starts at just $26,000, or about $35,000 in the UK. Compare that to Tesla's Model 3, which starts around $40,000. For many consumers, that's a huge difference, especially in an economy still dealing with inflation and high interest rates. BYD's Seal U DMI Hybrid and Ceelion 7 electric SUV are also capturing the attention of value-conscious buyers who want cutting-edge technology without the luxury markup. 4. Strategic expansion, manufacturing and localization. BYD isn't just exporting cars, it's building an ecosystem. Last month, the company opened a new battery facility in the UK, servicing its growing fleet of electric buses and preparing for deeper local integration. This move is crucial. By establishing a physical footprint, BYD is positioning itself as a long-term player, not just a foreign importer. It's a strategy that builds trust with governments and consumers alike, showing commitment to local jobs, innovation, and energy transition goals. 5. The bigger picture, EV boom in the UK. The timing couldn't be better. After the reintroduction of the electric car grant in July, demand for EVs has skyrocketed across the UK. Battery electric vehicle sales jumped 29.1% year-on-year in September, reaching nearly 73,000 units, according to the Society of Motor Manufacturers and Traders. However, there's a twist. The government's new grant excluded Chinese EVs, including BYD's lineup. Despite that, BYD continues to thrive, proving that consumer demand for affordable and reliable EVs can outweigh politics. 6. Beyond Britain, BYD's European dominance. BYD's growth story isn't limited to the UK. Across Europe, its sales are up over 200% year-on-year as of August, according to ACEA, Europe's top automotive lobby. Meanwhile, Tesla's European sales have slumped more than 36% in the same period. This reversal of momentum shows that BYD's value-driven approach and product diversity are winning over European consumers. Still, not everything is perfect. Last week, BYD reported its first year-on-year decline in deliveries globally, down nearly 6%, mostly due to softer domestic demand in China. But make no mistake, its international expansion is more than making up for that dip. Despite the good news, BYD's Hong Kong-listed stock slipped 1.3% on Monday. Why? Investors are cautious about short-term profit margins and potential trade tensions between China and Western markets. However, long-term fundamentals remain strong. BYD is scaling faster than almost any other automaker, and its battery expertise gives it a unique edge, especially as it can produce both vehicles and their most expensive component in-house. This vertical integration keeps costs low and profitability high, positioning BYD as one of the most efficient manufacturers in the global EV race. Wealthy business takeaway. Here's the big picture. BYD's rise isn't just about selling cars. It's about rewriting the rules of the automotive industry. From phones to EVs, BYD has mastered the art of reinvention. Its affordable pricing and strategic localization give it a huge edge in global markets. Even without government incentives, its growth shows that value and quality can beat politics. For investors, BYD represents a fascinating case study in emerging market dominance, cost leadership, and global scalability. And for consumers, it's a glimpse of what the future of transportation looks like: affordable, electric, and accessible worldwide.